Well, let's get into the markets. The JSE expected to push higher today, driven mainly by stocks of companies that make most of their income outside South Africa. Makwe Masilela is Chief Investment Officer at Makwe Fund Managers. He joins us now to make sense of the latest developments as far as the markets are concerned. Mr. Makwe, thank you very much for your time. So, South Africa Inc. stocks, perhaps I should put it, such as retailers, banks and food producers, they are expected to rebound after the sharp losses earlier in the week. Take us through how these stocks performed in early trade.
Good morning. Indeed, they did rebound. If you start looking at our hair, drug and grocery index, you will see that yesterday it closed up 0.6%, today opened up again 0.4%. If you look at the likes of Mr. Price of Oshinish or Truworth, which we classify them as the retailers, they closed up nicely over 3%. Today they opened up 0.6%. Our banks, unfortunately, as much as they closed up 0.5% yesterday, today they just opened down 0.3%. But the global economic sentiment is not looking okay, especially in the markets, given that the GDP number that we just got from China was less than expected. But yes, generally, South African Inc. stocks, they are benefiting. And also for the fact that most of them came out, they told us how many stores were affected, but they emphasized the fact that they do have insurance policies in place, and they're working on rebuilding those stores.
Let's talk about the rand, relatively stable against the dollar amid relative calm in and around at least Gauteng and KwaZulu-Natal, which have been mostly affected after days of violent protests. Talk to us about what the rand and where it is right now as far as the unrest that we've seen in the country, including just the widespread looting of shops, warehouses, factories.
Definitely. I mean, we've seen the rand reacting negatively early in the week, weakening to almost 1468, touching 1470, all because people were concerned about the unrest. But the minute we start seeing measures coming into place, we started to have some hope, that there will be some order, then the rand should start to stabilize going forward. But I think what has been pushing the rand as well, the fact that we are seeing the US dollar stabilizing. Remember, yesterday we had from the US itself telling us it's soon for them to start removing all these monetary policies in place, which are easy money. Then that itself tends to be negative for the dollar, and that benefited the rand. As we've seen since yesterday, the rand has been strengthening, all at the back of that we don't expect US to start tightening, because any tapering measures from the US, then that leads to lots of funds flowing out of emerging economies like South Africa. Hence, we'll see the dollar strengthening and the likes of the rand weakening.
Let's talk about the business community, Makwe Masilela. South African businesses, big and small, they're counting the cost today over the next few days. And in the middle of this also is the issue of livelihoods that are going to be wrecked or probably have been wrecked as a result of this local unrest. Can we get back what we have lost? And would you possibly even have a timeline?
If we do, it's going to take some time, and a timeline, we are talking anything between 18 and 36 months. Totally, just to put this in context, these are the times when people were not making money because of COVID. And before COVID, companies were struggling because the economy was not doing well. So as a result, you won't be surprised to find that other companies, because they were not making good money, they were not even paying their insurance. So now it's going to be a double whammy for them. But for those, maybe let's say they've got insurance, yes, they will be getting insurance payout. But remember, with insurance, usually you have excess that you need to pay. So now you have to pay excess on top of that. You are not making good money. And then even after you get the insurance to pay out, you have an opportunity cost, because for you to start operating, it will also take you some time. So whether you are covered or not, you're not going to reopen tomorrow. It's not a question of we're on a holiday or on lockdown that will automatically open. You have to take some at least 18 to 36 months to open that store. So yes, we're still going to feel the serious consequences of the current actions.
Yeah, let's end the conversation, Makwe Masilela, with some company news. Standard Bank and Liberty announcing a proposed transaction. Take us through those developments.
Remember, the two companies have been having a very good relationship since 1974. They've been having a very nice arm-length bank assurance relationship, and that has been successful. But in 1999, that's when we saw Standard Bank acquiring control of Liberty when they were buying the shares that were owned by the late Donald Gordon. So since then, it's not surprising to see that one can easily call this a natural progression of the relationship that has been existing. And I think for them to offer the current shareholders of Liberty Holding almost 32% premium is not too bad. And anyway, so far the independent board of Liberty Holdings are happy with the proposal, and they want to recommend that to the current shareholders. We don't even have to debate about the synergies. And unlike what we've seen, that what has happened between Nedbank and Old Mutual, we've seen that they had that arrangement. At some point, Old Mutual was the majority shareholder of Nedbank, but now as we're talking, I think Old Mutual owns just around 7.2% of Nedbank.
Makwe Masilela, thank you very much for that markets update. He is Chief Investment Officer at Makwe Fund Managers.